Good morning, viewers, and welcome to the 7th episode of Your Money, Your Taxes. I'm Paresh Shah, CEO of Paresh Shah Financial Services, and with me today is Mr. Lalit Abichandani, who's going to take all our questions today about FBAR and FATCA.
Hello, Paresh ji.
Hello. Lalit ji is a practicing CPA with 25 years experience in the US. He specializes in US taxation. He's been running a very successful CPA firm in New York. He and his firm provide tax service and tax planning for businesses as well as individuals. In addition to regular trading business, his firm services healthcare industry, IT industry, hospitality and entertainment industry. He has done hundreds of offshore voluntary disclosure and streamlined procedure cases and has become an expert in Foreign Bank Accoutn Reporting and the US-India Tax Treaty. He's a CPA and tax advisor to businesses, professionals, Bollywood industry, and a lot of film personalities. His website is yourtaxadvisor.com. So without further ado, Lalit ji, I'd like to start off with the hot topic of the day, which is FBAR and FATCA. I've been reading and hearing a lot about this. So can you please, it's very confusing. What is FBAR? What is FATCA? Can you please start and explain from the very beginning what that's all about?
Thank you, Paresh ji, for the great introduction. You're absolutely right. For last couple of years, FBAR and FATCA have taken up the news in the financial industry as well as in our tax filing practice. As you know, most of us, we have a non-resident account in India. If we are from India, we have a non-resident account, NRE or NRO account. But if you have an account in India or anywhere in the world, if you have more than $10,000 in the account, you are required to report into a Foreign Bank Accounting Report. That's what FBAR is. So you need to report this by June 30th of every year. Now FATCA is a cross-border tax compliance law that was initiated by US in 2010, and it's basically a foreign account tax compliance agreement or act. Under that, over 112 countries have signed an agreement to share the information about US taxpayers or even other country taxpayers to IRS. So the good old phrase of bank secrecy is no more. Everybody has to file the FBAR report and report their income on a timely fashion. So basically these two, the FBAR report as well as FATCA reports, are making sure that the taxpayers are complying with the law.
Okay. Thank you, Lalit. So that kind of explains a little bit. That means FBAR is the reporting that we as individuals do, and FATCA is the kind of an inter-country agreement.
Right.
So that's the difference between FBAR and FATCA. So tell me, who must file FBAR, and what are the requirements that a person has in that need for which they have to file the FBAR?
So Paresh ji, every US person or an entity or a business who has a foreign account with more than $10,000 in the account, it's not just one account. The totality of all the account, if it exceeds $10,000, that business or that individual has to file a foreign bank account report by June 30th of every year. So basically that's what the foreign bank account report is. And not filing these reports have dire consequences. There are huge penalties and big consequences. So it's very important to file the FBAR report on timely fashion.
That's kind of, even I have heard of these, that the penalties are very heavy in this situation. Can you tell us what are these penalties? What could happen if you do not file?
So I'll answer this in two parts, Paresh ji. The penalties differ based on whether it is willful or non-willful. I'll take the non-willful first. If you do not know about the law and you did not file FBAR reports in the past, not knowing about the law, it's considered non-willful. But even in non-willful, the penalties are heavy. The penalties are at minimum $10,000 per account per year. Let me give you an example. If let's say if you have $20,000 in 2 or 3 accounts, you have an NRO account, an RE account, and maybe you have a fixed deposit account. So that's 3 accounts. IRS can go back 6 years. For each account, the penalty is $10,000. So they can go back 10,000 times 6 years, 60,000, and if you have 3 accounts, the penalty could be $180,000 under a non-willful. Now, for some reason, if IRS doesn't accept that this is a non-willful, that it is a willful violation of the law, the penalties are even more severe. First of all, for a willful violation of the law, it is criminal. That means they can put you in jail. In addition to that, even the financial penalties are heavy. The minimum financial penalty is $100,000 or 50% of the account balances. So let's say again, if you have $100,000 in the account for past 6 years, they could charge you $600,000 penalty for having $100,000 in your account. So these penalties are really heavy, and I think people should understand this and follow the law accordingly.
And during this, you mentioned about banks are under obligation to report to the IRS. But what I've been hearing from some people, that banks are sending letters, especially Indian banks, as I understand, are sending letters to account holders and asking them to fill up some kind of forms. Can you talk a little about that? Tell us what's the environment, what's happening out there?
So Paresh ji, we just discussed about the agreement, the IGA, the agreement that 112 countries have to gather this information and report it to IRS. Under that, the banks are required to collect this information from you and through their countries report it to IRS. That means once IRS has this information, and if you have not filed the foreign bank account reporting, you could be subject to severe penalties. Now, once the IRS has this information and your FBAR report is not there, it is considered to be willful violation. So I urge our viewers to come forward now, if they have not done already, that they come forward now. There are 2 amnesty schemes going on. One is OVDP and the other one is Streamline Procedure. They can come forward and take advantage of that and go through a reduced penalties and comply with the law.
So I think I heard the word amnesty. What I understand by amnesty means that you can actually go ahead and do something and pay lower than what you would have to if you would otherwise be caught or something like that. So and you mentioned 2 names. So I didn't quite get it exactly, but correct me if I'm wrong. One, you mentioned something streamlined procedure. Can you talk a little about the streamlined procedure, Lalitji?
Yeah, so these are basically two schemes available under, one is under non-willful, it's a streamlined procedure, meaning if you were ignorant of the law and you did not intentionally violate this law, you could go in for a streamlined procedure. But there again, there are qualifications within there. So you have to certify that this act of not reporting was non-willful. Number 2, you have to pay 5% penalty going over last 6 years. The third component is that you have to file last 6 years of foreign bank account reports. Even though you are in 2015 or 16 now, but you have to go back to 2009 and file those reports. In addition to that, you have to go back to 3 years and amend your tax returns and include the interest or dividend or other income that you have earned that was not reported in the past. You have to come forward and report that. And finally, all of this penalty and taxes, the penalty of 5% and the taxes over a 3-year period, all of this payment is due at the time that you are submitting the streamlined procedure package to them. So make sure that you have enough cash flow available and come forward in time.
And that brings me that you said this is to describe the whole streamlined procedure.
That's right.
So tell us about the OVDP, as I understand.
So it's offshore voluntary disclosure procedure. That's what OVDP is, the second. Now, if for some reason you are not accepted in a non-willful procedure program, And there are cases where we cannot put them because somewhere along the way, if the taxpayer had knowledge and we cannot put them, or if IRS doesn't accept it, we have to go through. The second option that is available to us is this OVDP, in which again you can come forward. This is a complicated, much more complicated compared to streamline procedure, but nevertheless it's available. And in this, the penalty is 27.5%, and also you have to go back last 8 years as compared to 6 years of FBAR. In OVDP, you have to go through 8 years of foreign bank account reporting, 8 years of amended tax returns, 27.5% penalty, as I said, and also you have to make sure that you have enough funds available to pay these taxes. Also, one more requirement in there is to pay 20% accuracy related penalty in there. This OVDP is a very comprehensive and exhaustive procedure, but at least it's available so that people can take care of this. If they cannot go through non-welfare program, then at least they can go through this. And at the end of this process, and this takes quite a long time to go through this. At the end of the process, the government gives you a clean bill of health. It's a final determination. It's a resolution between you and IRS. And once that is completed and you have paid the penalties and the taxes, they will not come back after you, or you will not go to jail.
Lalit, all along, right across, I've been saying in your introduction that you're the expert in this FBAR and this reporting. Today, you're just demonstrating to us through all of this information how complex and how intricate this can be. The question that's coming to my mind is how much time does all this take? Once you decide that you want to do it, to get through each of these procedures, how much time does it take?
Paresh, first of all, it's a lengthy process, because now we are talking about going back multiple years in the back, whether it is 3 years of amended tax returns or 6 years of FBAR, or in OVDP 8 years of FBAR and 8 years of amended tax return. So they have to review all of these documents. So that alone takes time. Besides that, since the beginning of the year, IRS just announced that over 1 million people have come forward in these two programs. So IRS is really overloaded with these things, and as of now, it's taking somewhere between 8 months to a year to process this entire information. So we are just about clearing up cases that we submitted last year.
Wow, that seems to be pretty exhaustive and a long timeline. The thing that is bothering me really is that sometimes when there are overseas accounts, and I have seen this in case of some clients and things like that, that the interest that they earn or the income that they get on that account, they are paying tax on that in that other country. So let's just, for the purpose of this discussion, let's just take India as a test case. And if you can tell us or educate us whether there would be tax there and then again tax here, what is there? Is there additional taxes to be paid? How does that work out?
Paresh, it's an excellent question. Especially talking about in India, there are two types of accounts. One is an NRE account on which there is no taxes, and then at NRO there are taxes to be paid. So India has a tax treaty with US in which it's called double tax avoidance agreement. We are very familiar with that, and whatever taxes you have paid in India, we make sure that we give you correct credit in the current taxes so that you don't end up paying double taxes.
Well, that's great. What I can make out from this, Lalitji, is that this is a very, very complex subject, and it needs complete knowledge. A person like you. What I would advise viewers is that if they need any further information, they should definitely contact Lalitji. Lalitji, I'm sure you're open to contact. Yes, and we would connect with Lalitji in two ways. One, you can send him an email to his email address, lalitcpa@yourtaxadvisor.com, or look up the website, yourtaxadvisor.com, and call him on the number on the website. Once again, thank you, Lalitji. And viewers, we will meet you in a couple of weeks where we shall be talking about the protection aspect of financial planning. Thank you very much and have a great day.